Welcome back to Ferocious Education. This is Ed. Today I'm going to be covering ACB, Aurora Cannabis Incorporations. It's going to be a briefly technical analysis to give an oversight of the psychology of traders. Then I'm going to dive in through the entire presentations that they have, any information I could find, and what to anticipate in the upcoming earnings. Let's jump right into it. So on a 1 week perspective, what we get to see is that it has been going negative for a while. It's been a massive downtrend with a slight of a bullish kicker onto this week. Meanwhile, the momentum still is quite negative, but it actually is recovering from around negative 636 to negative 0.9. So a really nice recovery on momentum on a 1 week perspective. William %R is actually overbought at this level, and MACD is actually going on towards positive, but not as much as you think. I mean, it was positive for almost since the week of 12th of January, but it has dropped from 26.32 to almost $4. Volume is a little bit rough, and ADX shows in a sloppy movement. Now, on a 1 day perspective, moving averages as well are bearish, but on 1 day perspective, we're probably going to get something more bullish. You get to see here, momentum is actually really positive, really nice. William %R is quite close to overbought. It has been overbought ever since 30th October, though, around this range in here as well. And the ADX shows in a very strong potential of a trend forming. Now 2510, it does not show you a trend forming yet. It shows you a potential of a trend forming. Volume is actually increasing, so once the volumes decrease, that's where you gotta worry. Moving averages are going from bearish to bullish. Above the 50 SMA, that's bullish, but still on the bearish side. Now we can take a look into the next few hours, but you know, with Joe Biden actually getting that projection of winning onto Saturday, the 1 hour thing or 2 hour thing just throws out the window. So taking a quick look into moving average band, for the sake of argument, it's expected to trade 532, 484, and 435 in the top, middle, and bottom respectively. And we get to look into the unbalanced volume. This is the highest unbalanced volume it has ever seen. It just looks like a massive spike. So I'm not sure if that massive inflow to outflow is still sustainable, but we're going to go to see later on tomorrow morning. Now comes on towards stochastic fast and stochastic slow. This one here is a little bit interesting because it's seen a little bit of a dip here on the stochastic fast slow, but right now you get to see something. Dangerous sign. Notice how both of them are dipping. It reminds me of this scenario here. See how both of them are dipping here? Yeah, both of them are dipping here. We're looking at a top high, so we need to look into all the way back here, around this region here. See how close this one looks. So we're very much similar to this area here, even though it looks like it might have a leg up on the %D on the stochastic slow, but everything else on the stochastic really shows in that, you know, try to start securing profits. Don't enter because this is like one of the price targets that you start phasing it out, and set your stop limits really tight. Now we can go on the Fibonacci retracements, but back in October, before reverse split off 1 to 12, it was around 150.30 cents. So for that sense, the Fibonacci retracement will not make any sense. What we need to do is try to figure out supports and resistances. So the current support sits at this level over here, 1916. And then below that, we're looking at 752, 612, 504, 447, and 377. Significant resistances currently sitting at 983, 1079, 1177, 1289, 1387, and 1587. Now let's jump right into news. I mean, that's the big things, right? That actually move in a stock. So we're gonna go towards the presentation just a little. Aurora Cannabis, it operates in Canada, and basically they are taking a bite onto a $200 billion industry. And their plan to capture market share is low-cost cultivation, scale and global reach, Canadian market leadership, patient advocacy, innovative product development, and IP and clinical science. And motto is high quality, low cost, mass scale. The high quality, purpose built for cannabis production, optimization yields, precision environment controls, pharma grade production, and built to EU GMP specifications. Low cost, which is it's due to make it being highly automated, and a mass scale. It runs around 150,000 kilograms per year. Now they have around 4 production facilities: Aurora Sky, Aurora River, it looks like in Ontario, Whistler, Pemberton, that looks like it's in BC, and Aurora Nordic, that looks like it's in the EU. So that's true. Capacity 10,000 kilograms, EU GMP certification pending. The rest do have it. Around 142,500 is the current production rate. Aurora announced the planned closure of several Canadian production sites to further extract efficiencies from the business and streamline operations back in June. So they have 4 Canadian cannabis awards: the top Stevie flower, top Indica flower, top cannabis spray, and top balanced bottled oil, and the top 3 best-selling products in Ontario: Pink Kush, the Blue Dream, and the Tangerine Dream. More than 85,000 active registered medical patients. And so they basically have a little bit of they do have a diverse portfolio into what kind of products you're looking at depending on quality. They have the Whistler, the Aurora Drift, the Daily Special, and the St. Raphael. And actually, I'm just going to go back into their website and talk about them. So the medical brands that they have is CanniMed. About it to help you. There you go. CanniMed helps take the guesswork out of a product selection with simple names and standard product concentration. CanniMed was first very popular producer licensed to sell medical cannabis in Canada. MedReleaf. MedReleaf is known for its extensive product line and premium strain-specific extracts. MedReleaf offers proprietary varieties from Ticone Olm through a partnership with renowned cannabis producers and researchers. Aurora excels in innovation, providing patients with modern, convenient, cost-effective alternatives to smoking in addition to our premium dried flower selection. WMMC. Whistler Medical Marijuana Core provides simple, honest, organic certifications for the products that are grown in the soils and harvested in the soil in an old-fashioned way by hand. And then you got consumer brands. Whistler Cannabis Co. believes in organic growing, craftsmanship, and good old-fashioned farming, producing the high-quality products by hand. San Rafael. San Rafael 71 is a brand dedicated to authenticity with roots to a groover time. Our mission is to harvest high-quality, high-THC, and high-praise products in strains and formats our consumers love. And then you got your Woodstock. Woodstock takes its name from the 1969 festival known to be one of the most important events in the music history. Almost 50 years later, Woodstock is a line of cannabis products for thriving music and festival lovers. You got your AltaVie, pure cannabis products designed for the premium customer and segment. AltaVie consumers are curious and discerning about life, searching for physical and mental emotional enrichment. Got your Aurora Drift. We're almost done here. Discover Aurora Drift with a wide range of formats, from high quality edibles, vape, to strains. There's a memorable experience waiting for you no matter the path you choose to drift. Daily Special. There's all new Valley brands on the menu. It's a daily special. We're talking about great buds. It's always on a special. Daily Special, the best bud for less. Alright. Moving on back to the presentation. So they have the rights for over around 100 patents, with actual patent applications still pending. And they're looking to enhance basically the consumer and customer or patient experience through innovative product formats, including vape pens, soft capsules, oral spray, THC, and CBD oils. Moving on as well to their 2.0 products lines, which is 23 SKUs that were launched in December 2019. Initial product categories include vape, gummies, chocolates, baked goods, and mints. That is something. The core strategic objective achieved in the U.S. market is a U.S. market entry. And this is where it really becomes a dire catalyst. Makes it a bit different to other Canadian companies in the cannabis industry. Is that the large and basically carefully executed market U.S. entry aligned with Aurora's largest corporate objectives. Large and growing addressable market, assessed light business model, and highly scalable, has already achieved profitability. Aligned cultures focused on quality testing and regulatory compliance. Top management team decades of experience in regulated consumer product sales. So I'm not going to go through the actual details one by one, but let's take a quick look into their earnings. So 2019 September 2019 compared to 2018, and this will go all the way to June 30, 2020. So for September, what we get to see is their revenue has actually increased. It went actually 83,000 compared to 26,000. Their net revenue has increased as well, and their bottom line for net income though has decreased. And why is that? It's because now you actually do have massive deferred tax recovery for deferred net, so that brought it down quite a little. And then the next thing you've got to look at is their massive cost of sales. So even though it looks like revenue is increased, the net is actually worse. That's something to consider. So let's take a look if they did better on to the next month. So September 30, 2019, and then we go to December 2019. Revenues have decreased there, but taking a quick look into it, their net profits or the net sales and the gross profits after cost of sale is actually better. So look at 30,000 compared to, well, 53, but look down into here into 10,370. Let's double check this. And we actually I got it wrong, sorry. Their net loss is 1.3 million. That's actually really bad. This is the amounts reflected in thousands, so this is $1.3 billion in net losses. Really, really bad. Okay, moving forward. We're looking at here March 2021. Higher revenue. Higher net revenue than last quarter. Gross profits around the same. Operations, our net loss is around 137 million compared to the billion over there. That's fine. Next, June 30, 2020. Revenues look really nice, but remember, this is year ended, not three weeks, right? Quarters. Year ended from last year looks better, but their gross profits are less because their cost of sales have doubled. So their net loss, general loss, is 3.3 billion compared to 300 million. That is quite a lot. I mean, this usually says amounts reflected in 1,000 Canadian dollars, except share and per share amounts. So still quite a lot. So it really shows you a company that is struggling, and that kind of showed a little when you look into their shares, or their ATM offerings. It goes somewhere around right here. The existing ATM program is now complete, and they did raise around $272 million, but it really showed you why they need that money. Next thing is, let's take a quick look into their interactive analyst center. This is on their website if you would like to get to see a little bit more interactive analyst coverage, including estimates and whatnot, revenues of cost sales, gold, and everything in terms of the balance sheet. Really interesting to see here. I'm not going to go through it. I already did through the quarters, so if you would like, you can definitely go ahead and check this one. Now, they do have a proxy that is set for a voting deadline on November 9th at 10 a.m. Nothing significant there that gives me a red flag. Next thing is, well, they already know their final base shelf prospect reiterates fiscal for Q1 guidance. We already know their Q1 guidance, the Q1 earnings is coming up soon. Not going to go through exact details onto here, but basically it says the filing of the shelf prospectus is expected to provide financial flexibility to execute against previously stated business objectives. The company expects to be in full compliance with all financial covenants as of September 30th, 2020 under our amended and restarted credit facility. This really talks in about their debts to capital ratio. Aurora relationship with lending syndicates remains strong, and there are no new obligations to repay any portions of the credit facility until it started its maturity date. So it does show you it's a business that is actually struggling there, but still they are trying to restructure and re-improve their brand and their business. The brand is fine, it's just the business financials. Fourth quarter for 2020 highlights. Basically, Q4 2020 total net revenue was 72.1 million, a 5% decrease from prior quarter. Cannabis net revenue was around 67.5 million. By the way, this is Q4. Q4 2020, a 3% decrease. So you're seeing a decrease, but cost of sales has seen an increase. Nothing here really kind of gives me an insight that basically I'm going to say, oh, this is an amazing highlight. It's just everything that was actually in the quarter report. And this is their news website if you'd like to go check it out. It's a little bit tricky because you can't open up in a new tab. You got to click one by one. A little bit annoying, but the next two conferences are November 2019 is their first quarter fiscal year of 2020 conference at 8:30 a.m. Eastern Standard Time, and November 12th is their annual general meeting. Now comes into words. This is the $500 million proposed max offering. Right on here is the same thing, and next comes into words institutional buyers. Nothing significant. It looks like it's almost dead. Additional shares here and there. For instance, this one here. It looks like it's more. A lot of companies are bullish on it and adding more shares. But if you go look back at 11:05, or sorry, the 5th of November, Woodley Farah decreased their portfolio. Atlas Private decreased their portfolio, but you got JW Cole Advisors adding into their portfolio. It's a little bit mixed, but it looks more bullish than bearish. Now comes into the question, Ed, what do you think? What's gonna happen? All right, Joe Biden is declared as the president-elect by the Associated Press. So in all technicality, for the current time, we can say he won. The thing is that that's why it was running in the first place, is that Joe Biden was in the lead for coming in, and that's why it's seen a massive run. Do expect that it might have another leg, and it might actually see a massive run. It might see a gap up coming into Monday. But the quick question is, how many of these people realize that Joe Biden wouldn't take office until January 21st? So his legalization of marijuana doesn't take effect for 3 months or so. And of course, he got to first take care of the COVID-19 and all that stuff. And I imagine all the trouble that's going to happen between the Senate and the White House and all that stuff because, you know, different parties. But he still has some time to go. And from here to there, I do expect a drop. But I still do expect maybe a little bit off a gap up on Monday, but what you might be want to careful of is buy the rumor, sell the news. Their earnings reports don't look that good, so I wouldn't hold through them, but I would really hope that they actually recover. Now, remember the quarter reports, I don't even think the ATM money is going to be reflected onto there for $272 million in cash, but it's a little bit choppy one, right? What I would say is tight stop limits. Check the volume, make sure the volume is always inflow more than outflow, and once it breaks a major support, out, and then, you know, buy it on lower support, or start securing your profits, phase out. Entry here, I think, is very dangerous. What do you think about this sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.